Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 14th of January, 2023. And this is the weekly technical analysis for spot gold and dollar yen for the third week of January. And if you look at both of these inversely correlated pairs, spot gold has already blasted up higher. And dollar yen has continued its weakness, falling further lower after the US CPI data on Thursday, which met expectation, which was lower expectations set at 6.5% for year-on-year, and it has been declining since for the past 6 months and declining from just over 9%. So giving hope that the Federal Reserve may slow down their rate of increase of interest rate, and in their first February meeting, hoping that they will just increase by at most 25 basis points. From December, it was 50 basis points, and prior to that it was 4 consecutive months of or meetings of 0.75% increases. So this gave hope to the market, and it has rallied with a risk-on appetite. And US dollar, of course, is falling lower. Okay, let's move in to take a look at spot gold, where it has blasted through the 1900 round figure, which it already hit on the Thursday after the CPI data came out, and then it followed through very bullish on the Friday yesterday, and blasted even higher. So on a weekly time frame, no surprise, it's a strong bullish candle here. And looks like this year is going to be a strong bullish year for spot gold, and it's depending on the timing, we'll see when it's going to try to test 2000 next round figure. May take a while, but we'll see if and when it will get there, more likely when. And this week, there's no major news, but just PPI and retail sales figures on Wednesday, following last week's CPI data. Let's go back to the daily time frame, and I think we can update this fib to this swing move and a reversal move back up towards the 162 now. That's at the 1926 target. And it closed the week at the 1920, just above 1920, so not far away. We'll see whether it's going to take a pause and pull back, and 1900 is let's move the support back down now to, let's see, we move this to intermediate resistance for now. And move this up to, that's a key support down here, and we'll move the interim support to the 138 fib retracement. This next major support is going to be at, actually it's just down here at this breakout from the trend line. This long-term trend line here, if we take a look on a weekly time frame from 2021, and after testing it and breaking through, it has pull back, retest, and then shot back up. That was the previous week, and that's why there's a continuation move fueled by the CPI figure. All right. And for the next intermediate target, let's see. I think there could be a reaction pullback at the 162. So it could be a pause. And the next round figure is likely just going to be at the 1950 round figure. 1925 is already on the way, just near the 162 fib. So 1950 is the next natural round figure level to target. So that will be the next key resistance zone. Okay. All right. So when we take a look at the US dollar index, we'll likely see the US dollar weakening. And from this daily 55 EMA, there's already a crossover over the 200 EMA. So that's already a change in the trend to bullish. But we could already see that it was already moving up higher before that already. All right, so let's take a look at the US dollar index. And here's the DXY, US dollar index. And as an inverse correlation, it did drop lower right from the start of the week on Monday and drop below a key support level at a 103. And then pause for a couple of days and waiting for the CPI news on Thursday, and that was another plunge lower. So it has definitely weakened. Even right from the start of the week, it had already gapped lower. So traders were already expecting a lower move. And if we take a look on the weekly time frame, it is a very bearish week, and it's trying to target that swing low level that we identified last week, just at the 101 round figure. And it could try to extend lower to try to reach 100 round figure. There's a strong support there, just at a psychological level. So we could there are a number of options to draw the Fibonacci levels. But all of them will try to target this area just above 100. But for now, let's so even if you move this swing low to here, you'll see the 138 fib at the 131. This one here was at 100 point say around 10 or 11. We go down to this swing low, and that's above, just above the 101. But if we take the most recent swing lower, the last couple of weeks, just like the euro, then it lines with the 162 fib, exactly at the 100 round figure. So this potentially could be, could use this as the current fib. And you can see the 55 EMA sloping down and trying to cross the daily 200 EMA here. So that is likely to be already a delayed indication of a trend change. So let's mark this level as a strong support. It's already at the 105. This area now is going to be 103, is at the resistance as well. And we have another we'll say interim support at the 101. And then a major support at the 100 round figure. Okay. And for the week, yeah, we just want to check this again. And yeah, it's trying to reach the 101 level. Then we'll see when it will try to test the 100. Maybe just a matter of time with the FOMC coming up 1st of February. All right. So not looking good for the US dollar. Yeah, it's likely time for it to swing back down and retrace its very bullish move from last year. We can also just check the where we are on the longer term time frame, and yes, close past the 62 pip retracement level already for the move from last year, and 78.6 is coming up at the 98 and just below 99 level. So if it gets that far, so that's just a reference check. But yes, it has already retraced past the 62 pip level. Okay, let's move back to the other major pairs. Let's move on to the dollar against Japanese yen. And this week, apart from the US news, there's also the Bank of Japan meeting on Wednesday, and they may tweak their yield curve range further. So that's their tool to adjust for any currency movement, and instead of increasing interest rates, which is still at negative, minus 0.1%. So you're using a yield curve tweaks to widen the range. So we'll see what the impact is this Wednesday, whether it's going to further weaken the yen, or we'll see whether this yen strengthening will continue. We probably could move the fib now because it's too wide from last year's range, and move to a shorter term range here to this recent move down. And yes, that has hit the 138 fib extension, and then coming up the 162 fib extension at the 125 90 area. There is a trend line, perhaps a swing low. Let's take a look. It's all the way back. Once it's a swing high area where it broke up from, and that was a swing high from way back in 2015. which was broken last year. And that was from April last year. So now it's pulling back to retest that swing high. And that's right at this 162 fib. So this is at the high is at 125.86. And the 162 fib is at the 125.87. So yes, it's just right there. And on a weekly time frame, it's definitely a very bearish fall from the weekly 55 EMA. See the rejection from the previous week with a long upper wick, then falling to the 138 fib extension, and yes, targeting that's this swing low area as well. Before it gets to the next round figure at 125. Okay. So in the short term, it's still a bearish outlook for dollar yen. Trying to target the next fib extension. And we'll see what impact there is from the Bank of Japan's decisions and announcement. And we'll see how this correlates with the US dollar index as well. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.